Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, August 31st, 2009. Well, it's a few minutes after 1 p.m. Eastern Time here, and the markets are just hovering on a massive level of support here. We've been isolating for multiple days now, and I'm going to go into that. I want to discuss exactly what's going on in the markets. Why are we seeing a little downside today on this light volume Monday of a major holiday week taken by many traders to be with their families before really the kids go back to school starting next week. Now, a couple things to go over. Number one, the markets are down. Dow is down 95 points. Nasdaq down 28. S&P down about 13. That's about 1.25% across the board in this market. Now, the key is this, folks. What started this sell-off? And really, all you have to do is just look over the oceans to Asia. All right, Asia, really an Asian contagion going on as you saw China drop another 7% last night. That market has cascaded down in a major way, folks. Just really from being at a point where it was up over 100% over the last, 12 months or less from the lows in October of last year to a point now where we're seeing it come down 20% in the month of August. That is a huge drop. And you've seen a lot of selling that really affected overall Asia in total. China not only dropped 7%, but you also had the Nikkei, the Hang Seng lower, and that really spread throughout the world in the world markets. You saw the markets across in Europe slightly lower right now. Of course, the U.S. markets are down very nicely. Now, that was the key, folks. We all know that the Asian contagion obviously affecting this market. Now, you're not seeing this market down that much. I mean, you might say, well, China's down 20% in August, and here we are, the U.S. markets just maybe off the highs by about 3% or so, and that is true. And the reason there, if you want to look for reasons, what you want to talk about is a little bit of the light volume aspect of this market. It seems whenever we have light volume in this market, there's a definite tendency to float the market up, especially in the late afternoon. Now, the question is today going to be any different? And what do I mean by the floating aspect? Well, when there's no volume in the market, human psychology dictates that you're generally positive. Remember, human nature is to be positive. We're optimistic by race, by culture, just around the world, and you really see that today in the markets, and you can see it in the past few days as well. Good point of this is when there's heavy volume in the market, there's institutional unloading players out there. All right, so you're having selling, institutional selling. They're the ones making up really 70-80% of this volume in this market right now, minimally. All right, and you can see here early on Thursday, hard sell-off. Why? Because there's heavy volume. But as soon as the volume dies out across the bottom, then the markets begin to float back up. And the same thing happened on Friday. You had a nice solid gap up right to a double top, beautiful double top from a week ago Tuesday, by the way. But nonetheless, as soon as that came in, look at the volume, heavy volume again, good selling, then the volume lightens up and the markets are able to float back higher the rest of the day. So the big question in my book is, do we see that type of activity in this market? Are we going to see the selling early, which is where we made the low of the day right here? 1, 2, 3, third candle of the day at 10 o'clock, which, by the way, is a key reversal time frame. We saw the lows. Now, look at the volume here. Very heavy selling volume going on. Good institutions, taking some profits off the table. The question is, across the board, now you've had the lighter volume. The market floated up initially and has now started to come back down. Now, we're right on a major level. This 102 level is extremely important. This 102 level goes back to last Thursday's low right here, and that's what we call a double bottom. So double bottom in the market of support right here at 101.90 to 102, and that's exactly where we are right here. Now, the lows of these candles pierced and went down to a little bit of minor support down at 101.75 to 101.80. That is continually support here. So if we do break below this 102 level, which we're starting to do now a little bit, but the light volume can come in and affect that and push it back up very quickly. But should we break down here further, you're going to watch from this 101.75 to 101.80, which is a double bottom key level in this market. Now, on a closing basis, I'd like to see whether or not we close above or below 102. Again, the light volume in the afternoon is going to be really fascinating to me to see how that plays out. So watch that very closely. Now, let's talk about some other levels here. What are the other levels in the market? We obviously knew, in the premium traders and investors and swing traders in our research center knew that the 102.50 level was a major level on the downside. You can see the dotted line here we have in the charts. Sure enough, the high pivots of today touched that level, and that was the resistance for a sell-off. Beautiful sell-off from that on the first candle of the day as it pushes up, touches it, and then you have a hard sell-off candle here taking us all the way down before the little bit of a bounce here. Now, again, just notice how we're not really breaking down below 102 right now on the SPY. Now, the SPY, as I always say, mirrors the S&P 500, really gives us a good gauge of the S&P 500. Same thing applies right here, folks, so watch watch that very closely. But in any case, what you want to see in this portion of the charts is, again, you need volume to come in and it's to see if you can sell back below. At that point, you're looking for double bottom. On the upside, remember, 20 moving average should be a little bit of resistance. You kind of touched it in spirit of right here and pulled back off of it. If we go up, do we break through? If we break through that, you're going to look for this point right here. This is the late morning pivot high. Pivot high will be resistance. That's at 102.40 to 102.50, which 102.50 will be this green dotted line. So this line to this line will be a bit of resistance on this chart. It's also gap window now. If you get through that, you're going to go to this level right here, 102.75, and then possibly you can make a move up. By the way, 102.75 is also the 50 moving average on the charts. Now, let's go quickly to the 60-minute. What are you looking for here? First of all, see the yellow line, folks? I highlighted this for our premium guys in the Research Center over the weekend and on Friday night's video, saying that this was a key level to break. You have broken that level, but now, look, you're hovering right on this secondary level right here at 102. Big, big level here on the charts, guys. Really got to watch this very, very closely. Again, a breakdown of this, you're going to look at that 101.75, 101.80 level, and then you actually could go a little lower to 101.50. 101.50 right here would be your next spot to really look at. As you can see, it's really right at the lower end right here of this gap. There's a big gap right here. That would be gap window. If you break that, you're looking at gap fill right around 101-ish, give or take a little bit. So keep a close eye on this market. There's a lot of things happening here, even though this week is generally anticipated to be one of the lightest trading weeks of the year. Now, a couple things to watch later in the week. The ADP jobs number on Wednesday will be very important, and the unemployment numbers on Friday. Very, very big for this market, folks. Please continue to watch those. They will cause some gyrations. Again, the second half of the days are usually quiet. You get the economic news usually in the morning. There's not a lot of earnings news left in this market now. It's pretty much been done. So the economic news will affect the morning trading session. Then the afternoon's expected to be light. That's oftentimes why I just talked about how we've seen the float up later in the day. As volume gets lighter, markets float higher. Just general psychology of the markets. So watch for that. All right, couple other things. Just keep an eye on Asia tonight. That's going to be something very, very interesting to watch. China, it's an interesting situation. China may be headed for 2,500. Around 2,500, you'd start to look for a bounce unless things get really, really ugly. Just a side note here again on the SPY, look at this market starting to push back right here. You're not able to break on a closing basis. You have not been able to really close below 102 at this point. That 102 level is a master level, folks. We give these master levels before they get to our premium guys so they can utilize them. And sure enough, right here on the chart, you're really seeing the market show you why the light volume has such a great impact on the market to the upside. You can see it starting to float up already. And then you have master levels that just are not able to be broken. Very, very impressive stuff, guys, on this market. All right, that's all for really right now. The market generally will watch to see where does this close today. Do we see a float up in the later portion of the day? Do we see buy programs come in? Or maybe could this be a different type of day where for once in a blue moon, we see the market take out the lows of the day? Right now, you got to be neutral to positive for the markets based on the fact that light volume on a Monday here could be very, very big impact on this market. Have a wonderful rest of the day, folks. We will talk to you soon. Take care.